This is London with Bitcoin Spike and VIP Trader. We're going to go through the New York Open. Welcome. This is London, former hedge fund owner, private, non-SEC, not financial advice. Purpose of this stream is not to trade with, but to familiarize yourself with the technicals. And Duke University, Harvard Business School, etc. We build machine learning algorithms, etc. Let's dig into the price action. If you're not familiar with an open, let's take a look that we are up a bit in terms of where we're at on Tesla. Is going to open up just a touch. NVIDIA looks like we are opening up quite a bit to re-challenge that bear flag. Nice move, aka blackjack, double bottom, and we have a pass through going to surprise to the upside. And let's take a look. I believe that indeed we are T minus, looking at this, just seconds away from an open. Now we're going to pay attention to our critical levels in terms of a 5 minute. We will be crossing over and up over that specific Bollinger Band to the upside. On the hourly, we're pushing up towards the top side Bollinger Band on NVIDIA with a nice move this morning. On the daily, the key line that was hit yesterday is getting hit again. The specific cap line function on NVIDIA. Nice move today. Looking at the framework on NVIDIA, traders are looking at a specific breakout function up and over. Pay attention to the specific breakout on the flat top resistance, the descending framework on NVIDIA. Looking at these specific targets, itchy trigger fingers will, guys, be potentially compromised by additional levels of support, guys, that will be established through orders below. In terms of a ride up interest, we do have a 50% completion target to the upside, maximum probability. Thereafter, we would have that full amplitude potential move that the traders are looking at. We are looking at a nice move on NVIDIA, bears getting hit on the move, and yes, re-engaging where? On the specific weekly. This is the key. This is the key level. Again, up and above the specific weekly 20 moving average is going to be what? Bullish. Down and below the 20 moving average on the weekly is going to be what? Bearish. It's going to be a fact. We're going to watch it play out over the next series of days / weeks. It is in play, period. It's not going to be an easy, it's not supposed to be an easy level to maneuver through. So looking at your 50% completion, looks like we are heading up to that zone. Nicely done. In terms of Tesla, let's take a look at Tesla with a pop as well. We will take a look at the 15-minute. Looks like Tesla is not as strongly on the open, just some slight volatility flashing up in and around the specific and picking up some shorts there actually at the specific top pro line. Tesla with some good volatility. Let's take a look, but not as strong as NVIDIA, down to that lower pro line on Tesla on the 5 minute. Let's take a look at the patterning in play. Yesterday we talked about that rising wedge feature, and we'd like to see some expanding volatility. What stole the show on the open before the open today? That would be Bitcoin. Taking a look at Bitcoin, beautiful price action. And yes, we saw yesterday, let's go ahead and pay attention to this. When we see an expanding volatility function or equation in terms of a patterning in the market, we always want to pay attention to that. That's the 3 minutes. What did we focus on yesterday? Without a doubt, what we focused on was this expanding volatility below, and that was a sweet pattern to trade. Nicely done. You see that expanding volatility, bam, to the upside. Now, as you guys trade, as we do the opens, etc., looking at a 2% move on Bitcoin, just mind yourselves, we look at the open. We would love the open in New York to affect crypto and particularly Bitcoin out of the starting gate every single day. That would be our preference. To the extent that we don't have that volatility, we're going to be looking at the specific equities that should be the most highly volatile and hopefully as well situated as they would be with Bitcoin, with our crypto preference of trading. Looking at Tesla, let's dig into Tesla just a bit, and we will note that NVIDIA is just really rocking it around the house in terms of, we have to say, is, and let's take a look at this 15-minute real quickly, specific hit right into the 20 moving average. That was a nice hit and level of engagement. Shorts engaged at the 20 moving average on the 15-minute for Tesla. Let's take a look at what they paid thus far. In terms of the 15-minute, it's a nice segue between not too much of a micro time frame, not too large of a time frame, not a 3 minute or a 5 minute or a 30-second, right? But nice to see this specific move here, 1.29%. That would be a move that we could call if anyone decided to short into the open for Tesla. Congratulations, nice move. A bit of a rising wedge guys, just spill out and over from yesterday's price action. So we got this drop yesterday, spent some time yesterday in here. What do you see in terms of Tesla? You see the falling wedge dynamic in play, and that specific head and shoulder, combinant left shoulder, head, right shoulder on Tesla, with that support line pickup being challenged immediately here as well. So within that dynamic, what did we see? Really an up, out, and over on that specific line formation of the descending wedge and a bust on that pattern. So noted, okay, absolutely noted. We've been through the return to functions in terms of, let's look at one thing for Bitcoin very quickly as we look at NVIDIA. Doing nicely. Let's see if NVIDIA has picked back up on the order level below. Let's see, close. If we went ahead and moved this line up to the specific candle wicks, that point of breakout, yes, pay attention. Specific level of resistance on that breakout, pardon me, on that breakout, guys. In terms of looking at the preceding resistance loaded up with orders, it was close. We have to say you had to play a little bit aggressively, Literally came down to how strongly situated your level of resistance or your actual length of, or width, what do I say, guys? Thickness of your line. Easy for me to talk today. Been watching the commentators on CNBC too much, or maybe Bloomberg. My apologies. Looking at that preceding pickup, boom, required you to play a little bit aggressively on NVIDIA. So NVIDIA really laying waste to those specific bears yesterday that engaged at this top line, who may still be in a short from this area. You got it. You know that there are bears. Given the dynamic is still in a short on this level, making them think twice, making them fight for this coveted entry along that 20 moving average. This can be a deciding factor. Looking at that dropping momentum, you see the red in the background, seeing that dropping momentum on NVIDIA, making them pay. It's not an easy entry to say, well, I'm just going to short underneath the specific 20 moving average, right? Well, I'm going to pick that up and just put it in my pocket. No problem at max leverage, etc. Let's take a look at that. You know, the market is challenging. You know, it will push and throttle around. That's why we enjoy it, and we will apply everything that we have. Look at this, guys. I want you to pay attention to the top, and again, this is best viewed on, and I want to shout out to Lonesome the Blue. I appreciate the communication in terms of kind of a coincidence we found ourselves in with some indicator work that I'm doing. Thank you, Lonesome the Blue. Want to shout out to him on TradingView. He's developed some pretty cool indicators, and found one of his, and I was like, wait, that's like something that I'm doing. He has a different strategic approach on it, not that it's invalid, but I prefer our approach. But I really want to say thank you to Lonesome the Blue and shout out in terms of the specifics. Let's take a look at the top left on NVIDIA. Let's take a look at this specific time frame here on the weekly. Now, I will try and enlarge these as much as possible. Let's go ahead and do this. Let's expand pardon me one second. All right, let's expand. I need to drink water. If you guys don't mind 1 second. Take a look at the top left. That is your specific 1 minute time frame. We're on the 1 minute. Then let's lay this out on the specific weekly so that you can appreciate what's going on here. This is the weekly right here on the NVIDIA chart. Now, as we were to just give this some more room, if I can pull these over, so I don't want it to be too difficult to reestablish some equality here or evenness, something that will be visually presentable. Let me show you what's in play right now. If I were to take all of this off the screen on NVIDIA on the 1 minute time frame, I want you to see that the top of this line here is where, match it up on the weekly here. Do you see that the specific kickback reaction here, okay, literally is matching you up where? Right on the weekly, okay? So yesterday, shorts engaged, yes, a little bit up and over on that specific bear flag. This morning, who has engaged in where? Right on. You see the pink line. I don't want to move the cursor from the top left, but look at the weekly time frame. The weekly time frame. Do you see the crosshair approaching right here and having engaged right here at this exact specific level? You see, and we can actually get a little more fine tooth here. We did get over just a touch, probably within a threshold to be able to call this within the dynamic of the spread on the order book. You guys agree, right? That spread probably covered between the bid and the ask, probably covered whatever flex, near perfect precision laser guided entry this morning on a short on NVIDIA. So hitting into a lower time frame, what was the commanding feature this morning? You got it. Absolutely. Nicely done. Nice analysis. Hey guys, when we bring our indicator suite to you, it's the result of a lot of hard work. It just really is. We appreciate the opportunity to be really, I would just say proficient in terms of our approach to the programming in the market. Guys, we're in an algorithmic AI age. Looking at this, let me reinforce this at 0.7% to the downside. This is the struggle, the battle for. If we're looking at 0.68% move from that top here to the downside, or just from the specific order along that 20 moving average that engaged shorts. Now, bulls can push. This was a payoff to the bears on the weekly. Now, you understand that there are flash trades. There are also what? And it's nice to see that level re-engage this morning. Now, can the bulls push up and over? The guys who are going to fight for the specific 20 moving average weekly short are going to do what? What are they going to do? They're going to fight for it. They're going to fight for it here on the 20. They're going to fight for it above the 20. They're going to fight for this move being short until either, guys, they give up the fight, but I'll tell you, their risk calculated into a negotiation of a move as such. And congrats to anyone who traded that bell pattern formation on Bitcoin. All right, looking through some of the dynamics of the 20 moving average, again, offering the second day in a row, which is sweet, right? That's the key level on that weekly, an opportunity to schedule in on NVIDIA. That is the key concern right now on NVIDIA. Seeing this on the lower time frame, ba-boom, right into that specific 20 moving average that paid. Nice to see the move pay again, those orders waiting. Bam, executed, nicely done. If you're familiarizing yourself with the just the protocol or tactics that could apply, let's say that could apply, they don't need to apply in terms of what your trade strategy is. I'm just going to encourage you to apply what works. We focus on New York Institute of Finance. We focus on heavy programming, machine learning, just given some heavy background in terms of consulting and otherwise in finance. Over the years, I cut my teeth on New York Institute of Finance technical analysis of the financial markets by Murphy in high school at a really young age. And it was just something that stuck with me. And I've been excited to share it with you guys. And that's a great group. That's where Wall Street goes to school. Don't forget it. Looking at a preceding level of resistance to engage its support. So bulls are pushing up while bears are pushing down. Boom. Both have been rewarded today, both in the form of, and let's measure this from a recoup move into that preceding level of resistance to support on NVIDIA. And guys, we're not fast talkers. We're just trying to move with the market. You understand that we are not fast talkers. We are trying to keep up with the open on a market. If it has a specific opportunity of 0.25, we need to assess it immediately. We got to pick, guys, the needle out of the haystack very efficiently with the volatility that is in question. You agree? So I don't want you to think that we are fast talkers. We are trying to navigate a market that is moving relatively well and quickly. Opportunities may be there and may literally just vanish in front of your face. It may come down to a split second opportunity as you're looking at participating the first 10 to 15 minutes on the price action. You may have one move that you have a window of time. Let's say you have a window of time to include, say, a 5-second trade, an 8 to 10-second trade, right? Absolutely. That's what we like about the open. What offered that this morning? Tesla. Boom to the upside, bam to the downside, to a buy line on that specific 5-minute time frame, engaging and pushing a little bit further into the apex that we would rather see this faking out to the downside on the specific head and shoulders pattern, keeping in line with the specific attempt to bullishly express itself through the near the apex, beyond that 3/4, guys, which is the max, that 3/4 expression that we would like to see 75% into this pattern formation to really express itself ideally to the traders. That's what that's a maxim that we really try and abide by. What do we see if we go down into the 3-minute on on Tesla. Let's pay attention. I'm going to dig into the chats here in just a moment. I want to always make sure that I can really aggressively approach the specifics. I'll remind you, this is not intended for trading. Just so that you know, we're 8 to 10 seconds behind comfortably of the market dynamics. If you're relying on this stream for live trading and you don't have your own setup, your own tactic, etc., just understand this is not intended for live trading, okay? We're going through some specific technicals that we take into account while we have seen traders be very successful, while we also program such as machine learning, our Fusion suite, very nice in terms of the dynamics that we see. It may seem overcomplicated to us. It has been simplified through looking for opportunities for a breakdown. And here we go. This is the challenge. You see the expansion of volatility, resistance hit. I like that hit. Bam. Into the top side, bottom side. The bears to the bulls to the bears to the bulls. Guys, handoffs on volatility, capitulation down and below, and bam, a swing back up through. That is the sweet spot on a lot of these moves. Ask Bitcoin. Last number of hours, what paid? This paid. You guys got it. What do we like to get back up into this level of resistance anytime we identify this volatility? So it was hanging out on this lower time frame. To the extent that we see this move repeatedly, I'm going to encourage you to continue to trade these patterns. Continue to identify and trade these patterns. You say, well, you found it late. We're already 8 to 10 seconds behind. The purpose is not to identify and have a point and shoot club. Everybody pull the trigger on a specific trade. That's not the idea. We want you to see the tactics in play, assess the technicals yourself if you're into developing. One more shout out to Lonesome, the Blue. Hey, appreciate everything in terms of just the conversation last couple of days. I appreciate that. That's very cordial of you. I appreciate your conversation. Thank you. And no need to bother, guys. Lonesome the Blue, I just had a quick conversation with him and said I would shout out to you on the live stream and let him know a little bit about what we're doing. The expanding volatility, we like this pattern on Tesla. This is the highest percentage probability performing pattern in the market. It just is. So while you're looking for your bull flags, your bull pennants, we're going to be looking for expanding volatility, both in the form of assets that we can trade and identifying such in the form of patterns that we can trade on those assets. Let's take a look at the specific. They go hand in hand. I'll just tell you, this specific pattern is catching the eye right now on the 5-minute, the broadening bottom potential. Typically a bullish pattern. You know that. Typically when we see this expansion between the buyers on support and the sellers on resistance with a symmetrical dynamic, you can call this a reverse triangle, okay? And they do. I believe that you will find in Prechter's Elliott Wave that this is a reverse triangulation. Okay, typically it's going to be bullish. It may be asset dependent, just so that you know. You'll find certain assets, i.e. Bitcoin, which typically this will be something that behaves itself very well on Bitcoin, which is our asset of choice. We really approach, so that you know, we really approach equities and the volatility as an opportunity to go through patterns. That's why we trade, guys, overall, to maximize our involvement in the market through, again, identifying volatility. Number one. Second of all, identifying the patterns that are structured in with a volatility, okay, expression, and whereby we can maximize literally and down to the, I'm just going to say with a fine-tooth comb, how do we really maximize, guys, stretch to that real nth degree in terms of participation at that critical highest level of probability. It's what we focus on day in, day out. We are not a standard trade group. We do not have a standard focus. Let's say we don't have the standard focus of a standard trade group. Okay, we don't. We literally are attracted to assets with volatility. Thereby, we are attracted to the specific patterns within that volatility, those volatility expressions between buyers and sellers on those assets, which give us the edge. And that's our primary focus, period. That's it, guys. That's what we really want to underscore. We don't want a 60 to 65% probability pattern. We don't. We want a 70, 75, 80, 85 probability pattern. We want to make this look easy. Right? We want to be those specific girls and guys and girls that somehow can just make this look easy. When you're looking at a probability play that is, okay, that is, let's say 51% or 62%, that's not going to make it look easy. Those 62% are going to make, in terms of a probability function, are going to make things look a bit difficult. I'll tell you, the 75, 85% probabilities that you find in the market, and the guy who is coasting, or the girl who's coasting on 75 to 85% probability, I'm going to tell you they're going to make it look easy. So you need the volatility one. Number one, then you need the patterns, the specific patterns, okay, that we focus on. I'll just tell you, if you find a different pattern with a higher level of probability based on the preceding 4 decades of backtesting, extensive backtesting, empirical data, I want you to tell me, okay? We've done an incredible amount of research. I have facilitated discussions with and directly engaged in discussions personally with the key hallmark players in terms of those who have the most pronounced data set in terms of backtesting, i.e. Tom Bulkowski. Shout out to Tom Bulkowski this morning. Hopefully our work can be of some benefit to you as we try to be of service to our traders and to the overall field at large. Now, looking at this specific dynamic, you see the specific bell pattern formation. That is what we're looking for in the market. Boom, rock to the upside, 2%, bam, nicely done with a nice support entry on Bitcoin. Just while we look at this very quickly, nice support line pickup, did not push opportunity, bam, to watch that specific momentum play roll through. If you were to look at the momentum rolling through on this specific move up, the lower time frame did carry you up nicely on that momentum. We note such. And if you take a position, just make sure that you are looking at the specific momentum interplay here, looking at the momentum up and momentum down here. That 3-minute looks consistent on Bitcoin as of now. Be prepared for always some degree of divergence. Absolutely. Looking at the drop on momentum on the 5 minutes, seeing that pay to an extent, and anytime that we identify, this will be the crux, anytime we identify a specific volatility expression such as this broadening top here, we'll call it a bell pattern formation. And you see why, because we like to, specifically, we will say we like to rock the bells, boom, to the upside. They rock, bam, to the upside. Nice velocity on quite a few of these, and coupled in with a bit of a bull flag pattern formation. Brought that to VIP in the bank last night. If you traded, and to the extent that you did, I'm just excited for you. And if you didn't, catch the next one, no problem. Market here is every day 24/7/365. You know this. So looking at Tesla, backing off to about a midpoint, 0.15 on the day, slowly disengaging from and who got paid today? The shorts and the longs on Tesla. That's a good day. The shorts and the long, what did very well today? Our fire and ice did very well today. All right. In terms of that, just the specific green line, the specific gold line, the kernel derivative calculated function, that is our, guys, that's our key to properly managing our risk in the market, ensuring that we are engaging lower with longs, that we are engaging higher with shorts. That's it. The green buy line, the fire sale line. We love a fire sale. If we can get a fire sale long, yes, absolutely. There is a continuation contingent for a fire sale being hit with an expectation we would continue to go down. Again, we're looking for that confirmation of not just momentum, of all of our specific indicators on all of our time frames. The golden short, okay, above that top pro line and lower pro line, absolutely. And again, I'll remind you to view this on a big screen TV. That golden short, the blue line, is the, if you can catch it on, and guys, it's ice cold short. Rather, not the golden short, the ice cold short here on the top. And I say ice cold short because you have to have ice cold hands to hold one of these shorts, and it can really be a nice feature because it's an extreme expression to the upside, which can be a continuation feature. You always have to pay attention to the patterns in play and your specific confirmation across the time frames, across the specific indicators in question as well. So all the indicators, all of the time frames pointing in the same direction is the goal. So looking at this specific expression work itself out on the candle wicks, bit of a differentiation on the lines for Tesla. Looking at that 5-minute time frame to back off and just remind, let's look at very quickly as we see again, reminded that 15-minute engagement was nice. Okay, that 15-minute seems relevant in terms of, let's check NVDA. Where is NVDA? Again, just settled up along that specific 20 moving average on the weekly. It's engaged again, so it's really giving the specific bears here who are trading this tactic, it's giving them a stare down. We agree. It's giving them a complete stare down this morning. We like it. It's nice. And it just goes to show, okay, you want this coveted position on a short if you can get it. It's not going to be, well, I just close my eyes, relax, and, aim that direction and shoot. It is a battle to get into this at times. It can be simplified if you get lucky. But, guys, it's the rare off occasion that this is a clean, cool, simple entry without any level of complication. You know that. So the bears being, and as we would expect, the bears being challenged a bit for a coveted position. Let's take a look at this lower time frame with a bit of a flat top that we would, there we go, that flat top hiding behind some of those wicks. A bit of an expression here of an ascending triangulation. We know our targets to the upside in terms of this flat top resistance, descending line of support. Again, let's revisit one thing on a breakout. What do we know? That the market will be structured around those breakout traders who get anxious on a breakout. We always like to try and be a part of formulating the market around the other traders. Means disciplined, scheduling in on preceding resistance, absolute long entries along preceding level of resistance, boom, flip to support. And those are the traders who are comfortably riding this up right now on NVIDIA. Again, looking at that bear flag, you can just see this is a move that's probably not welcomed by everyone, right? Those bears who want that 20 moving average short, like, man, you're going to push us around for another day. We just got, if they just nailed the entry here along this topside resistance, this is the type of work that it may take to get involved in a real favorable short position on NVIDIA. That may make you work on it. We've had some good success, some great success on some time frames as you guys look at our key indicators, particularly this line hit here. Didn't fuss, didn't bother, didn't argue at all. Our specific RSI stochastic MACD, okay, line, the capital control line on the weekly on NVIDIA. If you own that, guys, you are in a comfortable position, have been in a comfortable position just due to the level of precision. So it took a 3-week time frame though, 3 weeks really, to schedule in along the top of this. Week 1 could have been miserable. Week 2 could have been miserable. Week 3, here you go, right? After all the pain and suffering there in terms of trying to get it engaged at a top line potential short carry down here amidst the red in the background. You see the downward momentum. That's just indicative of downward momentum. So we saw that engage, that red on the cap line, also expressive of the fact that the bears are in charge of the specific RSI, stochastic, and MACD aside from this momentum. So you'll see the red background means momentum. Then we have the RSI, stochastic, and MACD line that is going to be, guys, in control of the bears while red. So we have seen a bit of an opportunity of just a no bother, simple, easy point and shoot. But after a couple of weeks here that really frustrated and challenged those bears. So are we on week number 1 here? Are we on week number 2? You can argue that, but just remind yourself in the framework of the preceding number of weeks where this issue has been presented to the traders, that yes, indeed, it is something that they have earned a reputation for being able to suffer through this week 1, week 2, and bam, into week 3 to capture this move to the downside on NVIDIA. So it's a coveted position without a doubt. So seeing that again, it's just the bears are on that line, are they not? Let's go back. Yep, we know that. Again, I don't need to spread these screens across, but if you're a bear on that 20 and you just hit it again today, congratulations. All I can say, congratulations. I can't turn a bull into a bear or a bear into a bull. If I could, things might be a little easier in terms of not having to, or getting to really cover both sides or not having to. But there are bears parked here again that are going to reinforce this level, period. And as you see the top crosshair on the top left, look here on your screen to see that crosshair. Let me clean this up so you can see the specifics. But as the bears reinforce this line, you see, boom, literally, you see the top of the price action on the top left? Yes, you see that, bam. Literally what's being throttled right now. Literally what's being activated are the shorts along this 20 on the weekly. Boom, bam, trying to reinforce this tactic in the market. It's a great thing to watch happen, and you get an appreciation for, well, so they engaged at this level. They're looking for a potential long-term trade, but also there's a flash trade dynamic. And we really should call this now at 30 minutes into the market. This is 2 nice shorts at that critical level, that 20 moving average on the weekly that we talked about all day yesterday. If you were short at the 20, okay, from a carryover trade yesterday and got burned and flipped to the upside, and you're really trying to push on that downside contingent, okay, given the specific strategy, New York Institute of Finance, and you re-engaged, congratulations. You could have re-engaged twice right now if you're hunting for the position for the short. You'll see that while you had a carry position this morning, you were offered the opportunity to re-hit in 2 flash trades, bam, bam, at that 20 moving average. That's nice. That's good trading. With some Bitcoin volatility overnight, we will take it. We will take it, won't we? That's nice price action. This is good trading dynamics to be able to assess. Let's take a look at, and this is the best part about trading volatility patterns, looking at the 3-minute now after the launch to the upside. Where are traders ready to engage on a long? Boom, 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 boom. Along this level of support. True, you got it. What's the expectation? Bulls, target, up along level of resistance. Yes, indeed. So we like the volatility expression as well because it absolutely prepares us to be involved at nearly the extreme. I'll say nearly the extreme of this level of support. You got it. So we're not looking at this compulsion to enter into and needing to absolutely expose ourselves at the maximum degree of potential here along in this zone. We're prepared, along with the other traders who know these patterns, guys. Volatility expression, we want to enter along this line ideally, right? So it turns into an equation, a profit equation, dealing with what? Dealing with levels of exposure, okay, as you would consider the volatility of the price action. And if you haven't spent much time with these patterns, they will teach you that very well. In addition, they will teach you their absolute potential to rocket to the upside. They will. So it is not a catch-22. There is a probability ultimately of a move up here. But a move up to this extent, you guys can call it in terms of the probabilities that we see, boom, of a strong move to the upside like this. It's why we have the specific saying, rock the bells, boom, boom, bam, to the upside. And we literally, I'll put this right next to the pattern. Let me show you what we have. We have a Star Wars. Star Wars is killing it sometimes, guys. You got to give it up to Star Wars. Let me show you what I mean by a bell pattern formation, okay? Let me just show you the bell pattern formation. You see the bell pattern formation, that momentum can get swinging, boom, boom, and rock this, boom, to the upside. That's when we say rock the bells. That's what we mean, rock the bells, guys. Hit it with the momentum, swing, boom, and the swing, bam. That is why we are known to say rock the bells. That's Bitcoin 3-minute. Nice trade, guys, nice trade. Way to rock the bells. And you'll see these. You will see these without a doubt. Nicely done. So seeing a fallout, what's the probability as we get into the mixture here of patterning? Okay, we're looking at a dynamic here of a cupature and handle with an extended handle, double bottom cupature and handle. We won't call it an ascending triangle. We don't like this middle level double hit. We like the handoff between bull, bear, bull, bam, up and out, okay? We like that double hit on each side after that equivalent handoff between the bulls and the bears, right? So as we were to look at on this breakout, where are orders stacked as a matter of precaution and fact, along preceding breakout here, shared these targets with VIP in the back this morning. Congratulations to everyone who traded. Let's take a look. This is not on the wicks, okay? This is just a little bit more of a conservative measurement on the lines, but you see that cupature in the handle, extended bottoming formation, okay? We call it irregular cup and handle or double bottom. Double bottom, I would say a bottoming formation if we have a bit more of an equality here or an equivalent hit here just on a horizontal dynamic, okay, correct? So I get into a cupature handle here, frustrated, and then really a deep dig for another handle. You'll see that handle here decided not to complete to the upside. So looking at the dynamics, really the key framework is this specific expansion here. We did have that nice pickup along, just to review, nice pickup along level of support, boom, nicely done, and that 100% completion. So past that 50%, which we see, and we're just close to picking up on this specific volatility. If I were to push this out a bit, which I can, I'll become less aggressive, guys, in terms of my target to the downside. So as you formulate this, why would I have chosen, as you see that completion to the 100% target, why would I have chosen this internal line here? Okay, instead of this specific grab to be a bit more conservative, okay, to find the maximum level of support here that we could draw down into while this specific volatility is expressing itself. Have it maybe a bit. Preparing you for that bottom side ultimate hit, sure. Are you drawing these yourselves? Absolutely. Again, just caveat in terms of the purpose of this stream is not for you to look at and trade and pull triggers, right? On your trades, it is for us to have a discussion, for you to refine the appreciation of your trading on Bitcoin with the volatile elements of New York, right? As the markets get going, we can't ignore that many patterns. We just can't. And the opportunity to structure it into really our bedrock, which is honestly Bitcoin. And we know this, looking at a double top formation, always bring this into bear. Okay, you got that. Looking at the specifics, never avoid the opportunity to look at your targets to the downside on a topping formation. Don't let this specific pattern that we hunt down continually, right? And I'm still prepared where? You got it. I'm still prepared on this specific line, lower, bam. And I'll just tell you, because there is such a nice delineation of said framework, and it's a steep line. But if we were to let's remove the specific pattern framework here, you just see bull, the handoff from the bears to the bulls, to the bears, bulls, boom, boom, boom. You just see that very well delineated here. So it would be, you might be a bit skewed to only rely on a more aggressive line. You'll have an opportunity to pick up different lines here. Make sure that you're prepared on both. Okay, as you look at this, you'll have multiple constructive, let's say a multiplicity of constructive options as you look at your pattern dynamics in play. When we see a conflict, we just recognize it to the extent that we will encounter situations with no conflict. That is a big differentiating component, is when we see a lack of confirmation, we understand when we have it in the future. That's going to be the key focal in terms of, well, there's just too many things going on. Great. We're going to notice when there aren't too many things going on by discussing the multiplicity of events ongoing while we are challenged with differentiated patterns and targets. Okay, it's going to be real easy and simple when it's real easy and simple, and when it's not, we're going to understand exactly that it is simple. Okay, having explored the many times that it is not. You got it. Looking at engagement on a 4-hourly golden short, that's our fire and ice. That's it, bam, with a 1% move to the downside, crossover, bam, nice hit to target, topside band. The specific daily is going to be in question, and what have we encountered as a level of resistance here? We're just going to say it's engaged and has been very effective, essentially in providing a level of guys interaction. That specific cap line, that blue to red cap line, we are in a bearishly designated in that it's red. Stochastic MACD and RSI are in control of the bulls with an attempt to flip such. We'll have to get up and over that specific calculation, RSI, stochastic, and MACD. That's just a bottom line kernel calculative. We're trying to flip the daily momentum. You got it. That specific daily momentum had been to the downside. Got a bit of a nice move in terms of really only the secondary move here underneath that 20 moving average. So this is operating as a bit of a surprise without a doubt. And again, when we look at the consistencies of the crossover, cross unders, what are we critically aware of? Let's go through it in just a moment after we revisit Tesla and revisit NVDA. Let's take a look at Tesla. Tesla with a little bit of weight on its shoulders as of right now. We can go through some additional pattern dynamics. What is the immediate first thing that I see here on the 5 minute? Immediately I see a flat top resistance. I always want to measure things in terms of flat top resistance. Now we've got a descending line of support, right? Which, what is this going to engage for us? What is Tesla doing? It is following. It's got its backpack on. It's literally trailing what? Now, we understand the dynamics, and it's a nice dynamic to start the day and invite everybody to settle in with some additional patterns on Bitcoin. We will take the patterns from equities, apply them to our Bitcoin trading, guys. We'll just do that. How about that? Sound good? You got it. In terms of the specifics here, let's take a look at why or how Tesla is trailing specifically NVIDIA. Pattern progression, lead dynamic, what? We've got the specific top line resistance. We have on Tesla now, top line resistance, flat top resistance, descending line of support. Where's the sweet spot on this? Technically speaking, if you can get into the sweet spot, we've covered this. We have covered this. So what do we got going on? We have Elman Dahlman. Hey, Elvin, what's going on? Nice to see you. Nice to see the bells rocking this weekend, says Scotland. What's going on? And then we got Venus in the house. Have to say good morning, everybody. I've been off of the chats here for just a second. I want to shout out to Venus, of course. Venus, pleasure to be building with you in 2023 and beyond. Extremely excited. Scotland, great to see you trading. Boom, 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 boom. You got it. And Elvin, welcome. Hopefully you can add to the group dynamic here. If this is new to you, you need to probably watch some streams in the past. Let's pay attention, and everybody welcome anybody who's new to the group. We do have a back room. That is our VIP suite, guys. That's where we hang out. That's where the red carpet and champagne gets passed out in the form of indicator suites and some really great interaction. It's just a great group. It may not be for everybody. That's the bottom line. It's for us, though. We're excited. Looking at Tesla, flat top resistance, descending line of support, reminding us as it's formulated into this and the market playing coy between the Tesla and NVDA traders. We know this from a pattern perspective purely. Can we incorporate this into Bitcoin? Potentially. Now, we understand on the specific candle wicks, we have got this, and I'll draw this. This is not a bell pattern formation, but looking at that expansion, that reverse triangulation, okay, we have this reverse triangulation in play. That's the quickest way I can draw that. The specific candle wick formation, okay, of something that's typically going to be bullish, typically by the probabilities. It's not an overwhelmingly bullish pattern. It's just not, but it is typically bullish. We're going to be looking at momentum clearly, but what we're going to say is a flat top resistance, descending line of support. We just saw this. This just traded out of the starting gate. This traded on NVIDIA. You got it. Now, who's getting paid today? I have to ask this question because it is the same cool cats that got paid yesterday on NVIDIA. True? You got it. What did they engage on? The 20 moving average on the weekly. Bam, they just hit it again. They scheduled in and hammered this thing. You guys got it. This has been our key focal in consideration, that 20 moving average. Now, whether or not you trade the 5, guys, it doesn't matter. If you got the 4, the 9, the 18, we can pull a moving average out for every day of the week, literally, and trade it. What's consistent within the focal point of New York Institute of Finance of pro traders, where Wall Street goes to school? Not the, I found this online and my friend told me this, and it's hooked up into a stream deck, and I push a 21 moving average, and guys, New York Institute of Finance. Now they're going to walk you through the 4, 9, the 18 pro traders, guys. Okay, not wannabe pro, the real pros. They learn the 4, 9, the 18. The 20 as a focal point on that Bollinger Band is one of many tactics we look at, but it is and has been dispositive for 2 days in a row now. So if you have a different set of indicators, throw them into the mix. Replace everything I say with your specific moving averages. I'm just telling you what has engaged the last 2 days on NVIDIA. Boom, 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 boom. You got that right. So nice engagement. Now, as we look at the trailing edge of NVIDIA, you got it. With the trailing edge of NVIDIA, the dynamic is expressed here. We have the flat top resistance that traded, guys, flat top resistance, descending line of support. Where did we just see this? We just saw this on Tesla. Tesla, what are you doing? Huh? Now you're going to ride the coattail here of NVIDIA. NVIDIA popped this to the upside right on open. Bam, big move. Encountered that specific level of resistance again. If you shorted and you hit in to that 20 moving average with a short and you did it mightily, I would just say on the point of a conjecture that you might have, congratulations. If you are enforcing this line, congratulations. That is a hit. That is a nice trade. Boom. Guys, nice trade. Way to go. Way to show up. Bam. If you just got a point on that trade, boom. If you hit it heavy, congratulations. If you hit it light, congratulations. If you're working on the light trades, guys, to build into the heavy trades, hey, perfect. All right. If you are building consistency at a lower level, at a lighter level before you schedule in, it doesn't make any sense the other way. It just doesn't, guys. It doesn't make sense to go in heavy. Learn your lessons heavy. It just doesn't. So if you want to do that, that's fine. I do not like paper trading. I just don't like it. Paper training, I don't like that, guys. It's like it's a puppy. Paper training. We don't paper train here. We don't, you got it, right? We just don't do that, little puppies. No, you got to show up in the market somehow, guys. That would be the modus operandi of this group, period. You got it. And you know, London, guys here, former hedge fund owner, private, non-SEC, not financial advice, right? We are building, we are programming. Shout out again to Lonesome the Dove. Shout out again to just saying what's up, Lonesome. Not so lonesome, I'm getting shout outs on the stream. That's a good thing. In Lonesome the Blue, pardon, rather. Looking at the momentum interplay here, looking at that 3-minute momentum, not bad, not badly done. Attempt to pick up in this zone, and we rode that down well, didn't we? You got to note it, got to give it to the momentum. You see that red background, that is the momentum, okay? As we're heading down on momentum, I've got it just color-coded so you really can't miss it. Do you have some hiccups here? Sure, you do, okay? You're gonna have some whipsaws back and forth. It's not perfect. Look at the whipsaws here. You wanna combine it with your other indicators and your other oscillators to make sure that you have a level of confirmation. What's confirmation? Now, I don't like the colors here. Let me change this real quickly. This is a quick fix that I threw into the mix. I just did. I just created this a couple days ago just so that we could see the specific green and red, the momentum shifting around on the different time frames. What time frames do we have? I've got the specific 1 or 3 minute here, the 5 minutes here, top left, 1 to 3 minutes. Big screen TV required, guys. Put it on a big screen. 1 to 3 minute on a video. The 5 minute, the 15 minute. I like the hourly over here. I like the 4 hourly down here. I like the daily. I like the weekly. I really like the monthly as well, but I will toggle the specific monthly with the 30 minute. I will just do it. I will toggle the specific 30 minutes with the monthly. I'll just do it. I don't like to do it. And I'll tell you, to the extent that we will have some additional, I really would recommend the big screen TV as a move forward now in terms of your visual allocation to your trade game. As you look at the 5 minute pickup on the 20 moving average, that's the level of engagement right now on NVIDIA. Bulls trying to hold this level amidst some downward momentum without a doubt. That level is engaging as an attempt by the Bulls with a bit of an underside level of interest being that 20 moving average on the hourly. Again, not all of these levels are engaging all of the time. True? You got it. So is it too much information? No. What's engaging right now? You got it. What is engaged right now? What's relevant right now from these time frames that we can tactically deploy on not just equities. We focus on the open in the market because of the level of volatility, because of the additional practice and hits that we can look at, guys, in terms of patterning, in terms of the overall, just the multiplicity of factors that we see as relevant in primarily Bitcoin. I just tell you, because Bitcoin will steal the show. It will steal the show. And the equity traders always come to me because we have Bitcoin spike. They'll always come to me after a Bitcoin move and be like, yeah, I didn't catch that. I want to catch it now. I want to catch it now. I'm like, man, you have shown up 2 weeks too late. Okay, so that's the danger of just throwing Bitcoin because of the volatility. It'll sit there and then it will reward levels of the leverage on Bitcoin is very, very well appreciated by our group. I'll say that. We just appreciate it. We appreciate everyone who makes that possible for us to be in the USA and trade leverage. We really appreciate that. From guys, all the exchange, BTCC that we're on, to the instrumentalities, governmental, regulatory, or otherwise, that enable us to do that. Thank you very much for that. We very much appreciate the hard work that you put into providing us that opportunity, because it's a unique opportunity and we're not just sugarcoating and loud mouthing. It's something that we really appreciate. 15 minute, guys, looking at the cross under on the specific Bollinger Band, central 20 moving average is being assessed. We're gonna back out. I wanna show you one specific measure, as again, you saw, where am I prepared on this specific level of support? Yeah, you got it. In terms of the specific pickup, and you see this feature of the more aggressive line failing, which is why I drew this out, just to be a little more conservative in such an instance. Not that it would be dispositive, but that we would get a real play down and below along this level of support. Let's take a look at this on the 3 minute. Let's just gander over at the specific 1 minute, make sure we're still in line so we have confirmation on this specific volatility expansion. And again, bulls really appreciate bell pattern formations, expansions. Again, what do we like? We like when they rock to the upside. Now, this is a broadening, expanding, descending wedge. It's a mouthful. We will call this or a bump and run, which are recognized with 40 plus years, guys, of back testing formally by the foremost authorities on the, I'd say, the most well-respected levels of empirical data on the market. We're very data driven, okay? Whether or not we're dealing with our machine learning suite or we're dealing with scheduling in on high levels of volatility, okay, or the best patterns, literally the highest probabilities on said, assets involving such volatility. We're just highly empirically driven. That's the bottom line. We are highly empirically driven. So this specific level of support has been something that has rewarded, as we saw a rollover in momentum. You got it. Not only the bulls appreciate these patterns, but the bears also appreciate these patterns. Full completion to the upside on this bottoming formation. You saw that. We hit that 100%, and nice to see the return to preceding level of resistance. We have learned, and we cover every day on breakouts. We're not long, guys, forever. Typically, Bitcoin can be tricky. Watch the momentum. It's why I lined out here this bear, okay, or the bull, bear, bull. What I'm looking at is confirmation, yes or no, on on MACD momentum. You got it. I'm looking at the condition, whether or not we are bullish or bearish on said time frame. You got it. So that is my confirmation that we can look at continually and say, well, we have confirmation or we don't. Where are we strong? 4 hour, 8 hour, where are we weak? All the smaller time frames. So that's something that I'm looking at continually. And as we stream, I hope it is something you can focus on in terms of the details. Let's pay attention to, let's go back for a moment as we see, as we just take a look at that lack of confirmation or lower time frames really engaging here. Congratulations to anyone who shorted back. I think I have a short list of the VIP in the back who I know just shorted that. Congratulations, nice move. Let's go back to Tesla. Let's go back to Tesla. And again, flat top resistance, bottom line support. And what are we looking at? Again, a follow-up procedure on NVIDIA, which traded this morning, flat top resistance, bottom line support, up, out, and over. Nicely done. We'll just say in terms of the volatility, would have been nice to achieve a flat top resistance here. What are we battling again? Just remember yesterday, what was that key focal? As you saw that, I'm just excited about that 20 moving average, that short on the weekly today. Congratulations. If you didn't hit it, you got to purpose yourself to want to hit it. I was going to say, and on the theoretical basis that you might actually consider shorting something at a highly technical level of, a highly technical, relevant level of influence or interaction, to the extent that you want it, you're going to have to want it. Now, if you saw it this morning and you didn't want it and you didn't trade it, hey, that's all good. That's cool. But you're going to see it repeated. And again, we're watching the open for opportunities. I call them trade ops, trade op. Yeah, trade op is an opportunity. Looking at a bit of a symmetrical triangulation. We'll let that play out as well on NVIDIA throughout the day. Not bad. Are we seeing? Yeah, we are. We can also structure in and formulate in here in a bit of a diamond pattern. You all agree? Yeah, we've got a bit of a diamond pattern. Let's take a look at the easiest way to draw the diamond would probably be something like this. Let's take a look and see if this constriction, because we have, there we go, we have the elements in play, okay, for to the right-hand side, a specific, let's say, dynamic of a symmetrical triangulation. Do we have it to the left as well? Nearly. Yeah, nearly. So we're going to be looking at this pattern as a frustrating sequence and pick up through that bear flag. So not an easy give up. Let's dig over into, and yesterday the key concern was that bear flag, right, on NVIDIA. If you're new to the patterns, guys, if you haven't mastered them yet, you know the 2 books to get them. Rock and roll them. Spend some time with them. Put your effort in. Along with the other traders, absolutely. Let's take a look at, and shout out to everybody from Switzerland to Scotland to, let's take a look at that 5-minute engaging on that cap line, okay? We have rebounded on the 20, attempting to flip momentum on a dropping momentum basis here on NVIDIA. So that's noted, okay? Attempt to pick up the specific momentum shifting on the specific 5-minute after a re-engagement on that 20 moving average. Again, it's relevant. NVIDIA is going to remind us of one thing. Last week it did this to us very nicely. What is this on the bottom? We have a gap to fill. Just noted. After last week and the charades that it pulled, we're going to say noted. You got it without a doubt. You can fly, flip, and run up and around you as you would like to. And we are going to make sure that we are not absolutely just pointed due north. Now, the save on that feature is going to be your specific levels of confirmation. You're just seeing the 5-minute flip from bull to bear, etc. And just as such, is everything pointing in the same direction? No. No. Is there a bit of a domino effect? Yes. Right? Does that make it difficult at times? It can. Looking at the specifics, this is on the 36-35. We're counting down to 6 minutes into, at 6 minutes will be 1 hour into the session. A near perfect hit into that 20 moving average on the hourly. Okay, nicely done. You see just the straddle here between the 20 moving average and that top side band, highly relevant. Let me make sure that I have my fire and ice on. Where is my fire and ice? Where do we go, guys? Fire and ice. We need to actually clean that up. Let me do this real quickly so you have a little bit of a better look at the charts, including our fire and ice there. Bam. All right, you can always right click on any specific cell that you want to and click, apply these indicators to entire layout. That will give you the layout that you've just crafted on each of your time frames, okay? So looking at that specific engagement at the cap line, red cap line on the 5-minute. Bears trying to hold that level. That's RSI, stochastic, and MACD, right? So that level paying thus far. Let's take a look again at, as we identified a new pattern in play, let's note that in terms of the trade action that we'll see today, we see the diamond formation on NVIDIA. Noted. Just a congested area here just after that specific open. Nicely done. Have to say, nice to see the Bears get paid. We've been giving them their credit, don't you think? We've been giving them their credit. I haven't been trying to turn you into bears, right? I haven't been trying to tell you the market's going down, but we have been very, very distinctly and directly discussing levels of engagement wherein shorts will most likely be, and we'll say hopefully, unless we have an unpredictable market, will most likely be placed. Looking at this 15-minute, what do you notice on this? If we were just to scroll out on NVIDIA, scroll back into NVIDIA, we're noticing, you see this rounding formation here, you see just this nice range cyclical swing trading events here, and you see that rounding formation here again. You see that, right? In the context, it's a nice rounding formation, little, just nice swing, just seeing the cyclical nature of this, that momentum expresses itself, and you're seeing just nice swing time behavior, guys. That's exactly, guys, in line with just some cyclical activity wherein our fire and ice is killing it. You know that? It just is. As a matter of fact, anytime you see structuring or swing trades, fire and ice is really wreaking some havoc on breakout traders. We do not agree with breakout trading. We do not. Where do we want to short? Higher. Where do we want to long? Lower, typically, right? If we have targets below or targets above, how do we get to our targets? Ideally, with a pattern. Give me a target, great. How do I get there? With a pattern. I want a pattern to get to my target. Where are we at on the daily? Same, different day, same story on that specific cap line feature, that RSI, stochastic, and MACD, trying to hold up and above that. However, we have paid on NVIDIA in terms of that specific same line again. Let's look at Tesla as we will march into the back and continue to trade. We will be looking at our momentum on the 5-minute, on the, let's go on the 3-minute here. Let's go on the 5-minute here. There we go. Make sure I'm all arranged. The 3-minute, the 5-minute. Looking at the 15-minute, the hourly, everything looking good up until the point of the 4-hourly, right? So in the daily, in the weekly, you got it. Where are we on Tesla? To mention, we're underneath that 20 moving average, the same as NVIDIA. Let's go into the charts real quickly and take a look, as that I'm assessing some different dynamics on to let you guys know. We have established a blackjack. This is what I've been doing, and I've been hunting through some different indicators in the market. I can't find exactly what I want, just to see if TradingView can even do it, so I can look and see, okay, maybe we want a visual that looks like this or looks like that. We're very happy with our indicator suite as it would apply to apply to. That's why I shouted out to Lonesome the Blue this morning. He has a good design feature that we may inquire about. It's kind of more of a box feature rather than a line feature, so I'm not crazy with it. Crazy about it. It kind of reminds of order blocks, which are typically placed after the fact. So I'm not real crazy about that either. But typically that box order is associated with an order block, which will come into play and express itself on the screen afterwards, kind of in a repaint fashion. Not real crazy about anything that's just going to do that continually and expect me to front run or predict when it might do that. Different than the level of engagement and calculation that we have on our Fire and Ice. I'll just say that. Let's take a look at where we find ourselves on the specific, let's look at this on the NASDAQ, just to review where we're at in the macro. Difficult, and this was, guys, we have to say all but precise. A bit of a push below this preceding level of support, which is acting like it's going to try and engage now. We're up 0.4%. This is a big deal. You know this. This is a big deal in the overall markets. As we look at the tech sector, we've been looking at the NASDAQ for a long time. Anything that we can find that's correlated. And I think it's really how we got involved in looking at Tesla, because we noticed some nice correlations between Tesla and Bitcoin as we were trading, as we were investigating and looking at the NASDAQ, Bitcoin, looking at Tesla, Bitcoin, huh? And then we started noticing, it's like, well, Tesla, okay. And then we're starting to look at, sometimes there's an inverse correlation that we see today with, to an extent, with Tesla and NVDA. So it really just came to the extent one would be red, one would be green, different trade opportunities. You're seeing one lead the other today in terms of pattern dynamics, NVIDIA playing before Tesla on a similar pattern. Out of the starting gate, NVIDIA today traded on a flat top descending level of support, right? And then you see Tesla bringing that up into the 4 rate. Do we expect that on Bitcoin? Okay. As you would look at our specific trade dynamics, it's mainly focused around Bitcoin. That's just it. So if we can pick up an advantage of correlation, and then to start with, it would be on the NASDAQ. We're going to point to the key index for the tech sector and say, hey, what's this all about? But as we got into the dynamics of some real front running, a non-broad based rally on the NASDAQ, we naturally gravitated into some of those leaders, i.e. Tesla, i.e. NVIDIA, or for instance, NVIDIA, as the kind of pinnacle expressions of what we could get on a high volatility correlative that we could express into our Bitcoin trades. Mouthful, but I would say adequate. Opportunity to trade is very much appreciated by us. I'll just say that. So irrespective of what it is, but we will stay till, guys, we will stay focused on high volatility. That's it. So when we see volatility, even with an index that's really rocking and rolling, doing well, such as the NASDAQ did this year quite well, it's just exciting for us to be a part of anything that's really moving. That's the bottom line. So checking this out, what do we have? We have a level of concern, immediate, apparent, and without question. We have an immediate level of concern. We have a breakdown. We have a hold, standstill, and we have an opportunity for bulls to absolutely lay waste to a lot of orders. You know that. You have got bulls with the potential opportunity to absolutely just destroy the bears. True or false? Okay, to the extent that you're looking for confirmation, you bet there's a lot of work going on right now. In terms of the NASDAQ, you're down and out of a descending triangle. Yes, a head and shoulders. I mean, this is the type of pattern that a lot of guys on the street, you know, would just wish for this pattern. Now, where would be the great place to have it? Where would you want the short on it to be a little more comfortable? You don't want to trade the breakout. It can be trappy. Well, we typically want it higher. You got it right. We want to engage in that short higher, right? We want to short higher. We want to long lower. You got it. So when we see that RSI stochastic and MACD roll around, when we see that, that's our indication of short. You got it, right? Now, along the envelope here, it can be very, very difficult. Fortunately, I just say fortunately, and to the extent that we see this play out or not, we can look at the weekly on NVIDIA and say, well, over is going to be bullish, under is going to be bearish. Generally, and guys, as an expression of the bulls and bears price, let's say effect on price action, it just is a fact over the preceding 20 time intervals on the weekly on NVIDIA. Are we over or under? Are the bulls performing relative to the last 20 time intervals or not, right? You got it. It's really, really easy to look at a 20 moving average and say, okay, in the preceding 20 sessions, are these specific bar intervals on whatever time frame or session framework you're on, this will be the weekly, are the bulls over or underperforming? They're underperforming based on the calculation of the preceding 20 bar intervals. So it's really not complicated, right? So that's why we look at this. That's why we pay attention to this. And in the context thereof, it's just nice to have that that generally accepted, guys, non-provisional. It's not like, well, you know, maybe or maybe not. No, it's just an objective fact that they are underperforming based upon the preceding. The bulls are underperforming based upon the preceding, okay, 20-week interval here. That's significant. We want to take that into consideration as we look at the momentum, the red in the background, the bears starting to take control with that RSI, stochastic, and MACD, the perfect entry here along the top. And yeah, the contact with that 20 moving average, which we see with the expression, we're on standby, we're on alert for contact with the 20 moving average with this RSI, stochastic, MACD framework in play, being in control of the bears, right? When we see that red cap line, we're looking at the specific 20 moving average contact as a real plausible possibility, without a doubt. Looking at the hourly, seeing an attempt to flip on NVDA. We'll take it, okay? Looking at an attempt, you're seeing this in flux with the momentum. You see the bulls and the bears just fighting this, but up and over that cap line as we attempt to flip such and move to the upside. That's a nice move. That is a nice move to see. Just a candle set, just barely up and over, boom, into that foray. That was on the most recent candle set on that hourly where you got a clear indication, hey, bull, boom, take off to the upside. That's a micro advanced move there. I'm gonna tell you, that's an advanced trade move based upon RSI, stochastic, and MACD to schedule into that at 0.4, 0.6%. What was a little easier, retouch onto the specific 20 moving average, all right? But that cap line expression here is a nice move. That's a nice move, nice pickup, a little bit more of an advanced application of the stochastic RSI and MACD linear expression there on the price action. That's a nice move. Looking at the diamond formation, we're looking for a breakout. You understand the measurements, amplitude up. We'd be looking for about a 50% move. And we're just going to say, all to say, out of the starting gate, 20 moving average paid. It paid yesterday multiple times. It's paid today multiple times. The residual of the day we will dig into on the back, as are in the back with our VIP. Want to shout out to everybody. Hope you're having a great start to your week. It was a great open as we look at Bitcoin throttling to the downside, without a doubt. What are we getting on Bitcoin? What is the expression here? As you look at a failed pattern, a bit of a micro here. Now we're going to keep this in line. We're going to look for a potential, as you look at just, guys, what hammered the day here? The specific momentum on that 3-minute time frame. True. Look at that. Bam, 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 bam. This is why we're focused on momentum as a group. I want to make sure that the momentum is consistently in play. And just look at the move here on momentum. It's going to be expressed as well by your red cap line, the RSI, stochastic, and MACD. Very important, typically a value consideration down and below this level of support. But what are we looking at now would be a re-hit, a throwback onto what? A throwback onto the preceding level of resistance, bottom line support of that bell feature, which gave you 2% today. Rock the bell. You got it. What's the percentage probability? Boom, rocking to the upside, but revisiting that line of preceding resistance. What is it? Some of our traders trade this prolifically. Can't get away from it. What is that percentage? You're looking at like 62%. Not our favorite probability, but nonetheless a probability. So bulls on Bitcoin, just capitulating back to a near ground zero. We see this time and time and time again. If you go to your 8-hourly chart, I would just recommend that you pay attention to those spikes on Bitcoin, the 4-hourly as well. When you see a particular spike, let's say on the 4-hourly, these candles, and I'll probably go in the back for this, guys. I want to go in the back if I'm going to talk some detail in terms of our upcoming projects and what we're looking at, like blackjack, etc. We'll go in the back. Let me see here on Bitcoin. We'll go in the back. We'll discuss blackjack and some of these features as we look at specific time frames, etc. To not divulge too much outside of the foray of the specific group dynamics that we are cultivating, just in terms of respecting you guys today. Hope you're doing well. Great open, nicely done. Fire Nice doing nicely. What did engage? Just to remind, hey, was that a nice golden short? You got it. You got it, right? Nice golden short. Way to trade. Return to the specific bell pattern formation. We have the specific micro that we won't forget about, but we are a bit cautious anytime we have a micro pattern of volatility, true or false. You got it. We are a bit more cautious anytime we have a micro patterning in play, whether it be a bull flag, bear flag, any type of patterning in play. We're going to pay a bit more attention to the extent that it's a micro process. Let's get in the back. Let's go trade this volatility expression. Let's look for a potential recoup here. Let's see what would impede us from a standpoint of momentum of the classical features as we look at that just great throwback. And I will just remind you of one thing, which Bitcoin loves to do. Pay attention in terms of any type of a bull flag procedure. I say this frequently, and you see it frequently, to the extent that we have any type of a bull flag pattern in the mix as well. What is the frequency with which Bitcoin likes to crash back down into any preceding line of resistance on a bull flag, a micro bull flag or macro? What's the percentage probability that you all see that occur, irrespective of this expansion of volatility pattern? With what degree of frequency do you see this? Quite frequently. Quite frequently. So let's get in the back. Let's go assess this expansion of volatility, see what levels there are to pick up below, and if we can expect some volatility back to the upside. I will remind you that we have this level of support. Absolutely. In terms of the specifics, I will also remind you in terms of us looking for even, and let's look at this very quickly before we end this stream. Let's look at not only the crash back down into the bull flag pattern, let's look at the re-hit, bam, into this zone as we were to look at the macro versus the micro. Okay, appreciate how small this pattern is up along the top. This is on the 15-minute. We have a decently large pattern here on the 15-minute. Look at the 3-minute. All right, just be prepared anytime you're on the 3 minutes or the 1 minute time frame that you're looking at a micro expression. Do you see the degree? Let's see if I can back out on this just a touch. Look at the expression in terms of how large and how long this took to formulate, okay? And then look at the expression, as I ever say in the back, and you all know this, but if I ever say in the back, we have a micro pattern in play. You just see this bleed to the downside. Just be aware that we like our larger, more significant patterns. We expect some inconsistency on those smaller patterns. We say this almost every day. And while I'm trying to stay even keeled in terms of the expression and the deliverables, to you of what is being said, I just want you to appreciate that that's consistently being brought to your attention, that the smaller micro patterns do indeed result in being less constructive for us in terms of reliability. We just see that. So note such as well. If you're on, we said this yesterday, on the 30-second, 1 minute, 3 minute micro time frames, okay? They can be your friend in terms of identifying a shift in momentum, right? They can definitely be your friend in terms of identifying shifts in momentum, without a doubt. But those micro, and you all trade enough that you already know that those micro time frames can be very, very challenging. Let's dig into the back. We're looking at a crossover potential on that 1 hourly. Bulls will try and hold. They will try and hold that level. And in addition, they will try and hold after a nice crossover on that 4 hourly chart to the top side band target. Boom, boom. So we're on the cap line on the 4 hourly, by the way, engaging on Bitcoin. Way to trade, guys. Nice open. We will talk to you soon. This is London with Bitcoin Spike and VIP Trader. Thanks for the price action, we will say, to NVDA and to, what do we got here? Micro bell busting on BTC. You got it, Scotland. Micro, you got it, without a doubt. But we appreciate all of you, and we appreciate the opportunity to schedule in and assess the equities. Remember, guys, this is not to trade with or buy. We're delayed, as a matter of fact, 8 to 10 seconds. That can kill you in the market. You know that. But to assess the pattern framework, to assess the technical dynamics, and let's go in the back. This is London with Bitcoin Spike and VIP Trader, and apply it to our Bitcoin trades. We'll talk to you soon. Take care. Bye-bye.